Good.
We're set.
Okay, call the meeting to order, the finance committee. First order of business, the approval of the January 7th minutes. I'll ask for a motion.
I'll make a motion.
Second. Second. All in favor? Aye. Minutes approved. On to the treasurer's report.
Thank you, Chairman. We look at the March 31st financial statements and then we'll do a little year-end review. If you look at the balance sheet, about halfway, almost 3/4 of the way down on the second page, it shows that we have total assets of almost 5.5 million. Up $417,000 since last year, and primarily that's the loan fund. And with the additional monies that we received from the SBA, and the interest that we earned during the course of the year. We will look at, we jump back to the first page. We'll look at the operating accounts in a moment. It's about the 7th line down. As you can see, we're $138,000 down in our operating accounts from this time last year. Look, at least half of that, well, 2/3 of it is receivables. We did get notified that we were going to receive the December SBA receivable within 7 days. And we also understand the county is going to make the payment on the first quarter Columbia Forward receivable on Thursday. So, it's again, part of this is the reality of the fact that we have been taking the interest off the loan fund, which is now at $120,000 a year, putting it back in the loan fund. But when we report that we're on an aggregate basis that we made $40,000 last year, we didn't have the 120 cash that resulted in creating that number. So I think we're okay for now, and we continue to want to build the loan fund, but we do have some good news on the loan fund that I'll ask Martha to just share for a moment.
Yes, we found out just a week ago that we have been approved for another $1 million loan from the SBA. And the attorney has started working on the closing documents. We hope that money will be available to us in early June.
And, that really is a very positive sign, because we had heard nothing from the SBA since November about that request. And we had heard nothing since the new administration came in and previously had targeted the program that we run for a 20% cut 4 years ago or 8 years ago. And so even the regional office of the SBA said it was the first positive news they'd heard out of Washington as to moving forward with the microloan program. So I'm not as concerned as I was 2 or 3 weeks ago. We're now waiting to see what the grant will be. It's usually based on your loan volume, and you're currently at 260,000 plus or minus a year on the grant, and it does run July 1 to June 30th. So it is important that we get some resolution of what that's going to be for the new fiscal year. On the liability side, on page 6, our total liabilities are up 409,000, and again, if you look at that, it's a combination of the loan fund and the Office of Community Renewal grants that we receive that we have to book as income on one side and an asset on one side and a liability on the other. We'll see in a moment that previously, years ago, we didn't do both corresponding entries, and so when the asset, which was a loan, got turned into a grant, it became a liability, and we had to take the revenue hit. So now we book both sides of the transaction, so it doesn't impact us in a negative way. Any questions on the balance sheet? On the P&L, we're doing fairly well. We're only down $7,500 on revenue of 300,000 budgeted. So we're at 97.5% of revenue. On the expense side, we're at 77% of expenses. So we're at a $22,000 net income based on projecting a loss at this point in time of $50,000. And you know, again, when I look at you know, the expenses, the only area where you know, we continue to watch the expenses is basically the computer equipment and leasing line. You know, that's up 144%. And also our telephone and internet is up 165%. But that's an anomaly that we're trying to figure out, because once we switched to Mid-Hudson for the phone service, because the group we were with had doubled the monthly fee. It took us a month or so to get to the new lower bill, but we also no longer have a cable internet bill. So we're putting telephone and internet on the same line. And last year it was on a line by itself. So I'm not too concerned about that. But you know, at $15,000 a quarter on computer equipment and leasing, you know, that's $60,000 a year. I think we had budgeted 50. Very questions on the P&L. Moving quickly to page 10. You know, this does tell the story of cash flow. If you look at the far lower right-hand corner, you'll see that we had total income of 291, and we only booked in operating 255. So you can see how much interest came in on the loan fund. And if you look at page 12, you can see that on an operating side, we lost $8,000. But on a aggregate, we made 22. Now, the difference of $15,000 went back into the loan fund, not back into the cash flow. And again, if you do that on a four quarter basis, you're looking at you know, losing another 60,000 plus this year in cash flow. One of the things that we have to take into account, and we'll look at in a moment, is this new $1 million we're going to receive. We don't know what the interest rate is going to be. For the past several years, starting with 2019, and remember, these are 5 to 7 year SBA loans. For several years, they didn't charge interest at all during COVID. And so if we were booking the loan out at 7.5%, we were basically taking the full spread. You know, our guess is, we don't have any guess as to where they're going to be, but you know, that may adjust our interest income as well. So I don't want to start moving around until we get a sense of that, and we will know, because they actually sent us the resolution for the full board to approve with respect to entering into the $1 million loan documents for next week's meeting. So as we know that, we'll have a better picture of that. Any questions on the P&L?
Can you remind me, for that loan fund, is the interest rate fully set by?
No, we can go up as high as what?
I think we can charge 7.75 above what we paid the SBA.
Got
Now then you start getting into how you're helping the client. Right, but so that's the treasurer's report. I think it needs a motion for approval.
I'll make that motion. Second.
Oh, second.
All in favor?
Mark, did you just wanna run through the dashboard?
Or, what page?
Page 13.
Sure, loan client A has been no change. He's told me he's sending in a payment, we haven't received it as of yet. Loan client B, continues to make a monthly payment, they're not caught up. Loan client C is in, contact with us and keeping us apprised of the situation, but no change.
That they may be selling the asset,
Yes,
so.
and we do have some updated information on that, Mike. Loan client D, he is a month behind and we've been in touch with him. Loan client E, remind me. Oh, they made their payments, and loan client F made 3 payments, and so they're caught up.
So it's a $10,000 delinquency, on a, $2.5 million loan fund.
Martha, it looked like there were more clients on here than normal.
Yeah.
What does it take to get to the dashboard? Is it
They
like
need-
one week?
More than 30 days past due.
Got it.
Yeah.
And then once they get current, they're off the dashboard. Okay.
Yeah, so when we present this to the full board next week, those
After
two that I
it's done.
mentioned have already dropped off.
Got it. Thank you.
Any questions?
And we have to approve the portfolio report too. Motion. Right, I can make a motion, ready? I'll make the motion. Second. All in favor?
You can also say without objection,
I
so.
thought you were second. That's why I didn't.
You can also say without objection, so ordered, right? What are they doing in Congress? I thought I'd put together a few reports, if you want to start, with the one that, may have been on top. It says balance sheet, 2014 to 2024. This is taking, the, high level categories or classifications that UHY used in the audit. And, you can see in 2014, our assets were 3.4 million. They basically stayed in that range until 2022, when we really started increasing the amount of SBA loan drawdowns. And we're now at, because we had generally, up until 2022, we had taken approximate, anywhere from 114 to 350, 325. And then in 23 and 24, the amount we received, from the SBA, increased up to the $500,000 level. On the total net position, you can see we went from 3.4 million to 5.4 million as well. On a 11-year average, we would have been at 3.8. And if you look at the growth, it's almost a $2 million growth in that position over the 11 years. On the profit and loss side, if you look at the third line up, total revenues in excess of expenditures, you can see in 2015, we wrote off a number of, that's when I arrived, we wrote off a number of loans to clean up the balance sheet. And those days, at times, we were doing $100,000 loan, or we even did a $400,000 loan. And that generally related to a potential hotel on Greenport and a fish farm before the current owners of the fish farm acquired it and have done well with it. You'll see in 2020, that's when we had to write off the $250,000 grant. Again, that was to the fish farm. Yeah, I think it was. And and the reason was we hadn't booked prior to, that would have been in 2012. We didn't book a double entry. If you, even with those anomalies, you can see that, over the 11 years, our average is, net income is $14,000, which isn't bad for a not-for-profit. And basically that's what we operate, and you can see again, how consistent how consistent the organization has been and how its increase or decrease in assets is so dependent on the loan. And we did do an analysis that if the SBA had not decided to proceed with this micro loan fund, and it totally collapsed over the remaining life of the outstanding loans at a 15% default rate, which we've never seen, we would end up with about $600,000 of asset value. And you know, that includes collapsing the loan loss reserve accounts and also collecting the remaining balance of the net interest over what we might have owed the SBA for the loan itself. The other thing that Martha and Steve and I worked on was we also have been leaving in the loan loss reserve funds the full 15% of the original balance, even though it's only required to maintain 15% of the outstanding balance to the SBA. But that gives us the ability to aggregate the excess for the next tranche of funds that we're drawing down, so we don't have to go into working capital to fund that. Right now, if we could take down 900,000 of the million, because we only have to put the 15% in, as I understand it, when we draw it down, not when the full loan agreement is approved. So, you know, we're in good shape there in terms of again, not depleting cash flow further. And you know, so this was an interesting report for you. The next report, Woody,
I just noticed the growth in the restricted net asset. Is that just the SBA money?
that's because we have those loans, those grants.
Yeah.
That come from the Office of Community Renewal, and they do, UHY does on the financial, does an analysis of the SBA.
And that's but that's unspent
Yes.
assets.
Yes.
Okay.
The next report, and Martha or Steve, this is the report that Steve does. Pass that over. It really shows the great, impressive work that Martha and Steve have been doing. Martha for years, Steve for the last three years. 3 years? Two. Probably seems like 5 to you, only 3 to me. But as you can see in column 2, the SBA has given us $2.9 million to date in funding to lend. No, that's the amount of loans that we have made. The next column is the amount of loans from the CEDC loan fund. So over the 11 years, we've loaned $5.8 million to 244 companies. We do get the grant money, and if you look down at the second tier, the second column, we've received $1.4 million in grant money over those years. We do have to match with in-kind a portion of that, which is 341, which brings the total administrative revenue to run the loan program if it was a standing entity to 1.8 million. We've provided $292,000 of contractual technical assistance to third parties, or to repaid third parties, that on behalf of clients. Each of us here also provided a level of technical assistance to clients that we use for part of the match. The match is not a cash match, it's an in-kind match. If you look at the 291, we've used that to serve over almost 800 clients over this period of time. The interest on the 2 loan funds totals over the 11 years, $749,000, and that's what we put back into the loan fund. And interestingly enough, one of the things we did 10 years ago, we had $750,000 in the bank, and we took $250,000 and created a loan loss reserve fund for the organization. And we used $240,000 to purchase the land that we have out on Route 9H. So you know, you can see why, we're back at the cash flow issue. Total write-offs on $5.8 million of loans of 169,000 is, you know, less than 3%. So, you know, it's to the credit of the team contacting the borrowers and keeping only 5 people on the delinquent list, and then having us say that's a lot of people compared to what we generally have on that list. We also have had over 100 people go through what we used to call our micro business seminar series. We have had, currently, we have $2.5 million on the street with $1 million to lend. And that totals, when you add it together, we have almost a $3.6 million loan portfolio. In terms of the SBA funding, which I was confusing earlier with the 2.9 that we have loaned from the SBA, they've given us 2.57, and in some cases, we were able to keep the principal during COVID. We can keep the principal payment from the IDA. So, you know, I think when I go to the Board of Supervisors with this, they realize we also provide the administrative services that they pay us $460,000 a year for, but sometimes it's lost on them what the value of what CEDC does in terms of truly helping small businesses. What's not on here is the new program we have, the Micro Enterprise Grant Program through New York State. And Martha, could you just give an update on the first tranche and what we're about to do?
Sure. So last year we received $275,000 plus an administrative fee of $25,000, and we essentially granted the entire amount. We kept just over $5,000 for the admin fee. Every one of those clients completed the training program. They received their reimbursements, and so we ended up with 13 happy customers who received each approximately $25,000. In this round, the grant committee met yesterday and they approved funding for 13 businesses that have applied for the grant. The training classes start on Wednesday. It's a 4-week training program. We expect all 13 to finish the program and again, to be reimbursed in full for the amount they requested. And this time we did retain $25,000 to cover our expenses and staff time.
Found is there are people who really understand cash flow and leverage. So they're coming in for a $15,000 to $25,000 7.5% loan. And you know, they're putting 20,000, they're walking out with 60,000, or they're walking out with $45,000 in cash and only paying interest on 20. I included something that some of the auditors, not UHY, but the auditor of the IDA said we should do, and that's give the board visibility to how the actual spending. You know, I have another version of this if you're interested that just does it by top to bottom. And you know, we only have, I think there's 8 vendors who are over $10,000. But you know, I thought this you know, did provide a you know, an interesting breakdown. And obviously, because I'm on a contract, not on a payroll, you know, the consulting expense is higher. And then, you know, the rent at 47,000 and the accounting and what's on here, which is a little bit distracting, is the 65,000 that we give to the chamber under Future Forward. But that's because we're getting a $150,000 grant and we pass through 65,000 to the chamber and we keep 85 for ourselves. Any questions? The next thing is really for to complement Cat and to if we go to the, it's got the blue coverage color. These are the adjusting journal entries for 2024, and as you can see, the bulk of adjusting entries in JE5 were because they were updating the data that we had given them initially on a trial balance to start the audit. And when they tied it out to additional data. So, you know, there were very few adjusting journal entries. There are a few on the back page. And then they reclassified a few things. So I think it's just pretty clean.
The only thing that caught my eye was the land adjustment. Do you know more about why they were switching that? Reclassifying journal entry 6?
The issue was that they had booked originally 237.9 and I will go back and find out exactly, but
Okay, thank you.
there was an explanation that they were trying to reconcile.
Okay.
Something.
Because you had that land for more than 1 year.
Yeah, well,
Right,
it was
so to
an
make an
issue that it had
adjustment.
been booked improperly a previous year,
Right.
and they were. The next item here is because I was concerned about whether there would be an SBA program, and the fact that half of the revenue for the SBA is was not under contract because of the way it's fiscal year agreement, not a calendar year agreement. You know, I went back and I hate revising budgets. I'd rather, I don't do it on the QuickBooks. I'd rather explain the deviations or variances. But so in calling this a revised budget is kind of not the right terminology. But you know, I went back and said, you know, how comfortable I am. This is really, it should be a forecast. How comfortable am I with the budget numbers that we originally came up with? You know, I think we're going to do $5,000 better on the administrative revenue. We're going to be even on the county relationships. You do see that you know, approximately 50% of our money comes from the county. And we are, you know, working on that because the Columbia Forward and the Columbia Housing income goes away at the end of 2025. Our bank interest is down because we don't have as much cash. And so, yeah, I think we are gonna take a hit there, from what I had budgeted. What I budgeted based on, the aggregate, amount in 2024. Our, you know, we're gonna be up on our interest income. I think we'll be higher than 125, but again, I didn't know how much we're gonna have to pay the SBA. Although I have a separate line item for that. Membership and sponsorship is disappointing. You know, I think we could be as much as $25,000 down. And it's really something we have to take the good part is if we're leaving money on the table, we'll need it next year. But we really have to sit down and develop a program. And I think we just have to be more aggressive in the follow-up. And frankly, I got concerned during COVID about pushing people. And but I don't think we ever got as high as 60. And when I came, we didn't have a membership. But you know, that is an area where I'm adjusting my forecast, but I think there's opportunity that will help us next year. If we were at full bore there and we couldn't, there's no opportunity to get more money there, I'd probably be even more concerned. On the SBA, you know, on the total, that SBA line is wrong. That should be the total income line. You know, where it says that we're down 32.5. So the total income, I think, would be down 32.5. What I did, and part of why it's adjusted is there could be two more $10,000 IDA deals that close, but I don't want to get overestimated on those. On expenses, you know, conference and training, that's for the staff. I go to 2 conferences a year. I up that because, there are more and more opportunities for people, to get out and do networking, and frankly, the mileage rate has gone up again. And to the extent that we, so I don't take mileage because I'm under contract, but the staff, I mean, if you go 10 miles, it's $7. If you go to New Lebanon and back, it's 40 miles, and it's, it adds up. But we don't want to restrict people from doing that, so I wanted to beef that up a bit. Our employee expense is down. Total employee expense is down 100,000, and that's because we eliminated the project manager's position. And the rent is the same, the grants are the same. Our micro business program is the same. On new initiatives, the college did not renew the program that we made the $15,000 annual commitment to. So I don't have a substitute program for that. But I did, they did reduce it so that, I don't see any, we may not even have a college program with the transition and college president. Our office expense, I've got it where it's budget, but I am watching that computer equipment leasing number. We did have an increase in our relationship with our internet service provider because when we went to we saved $16,000 or $17,000 by not replacing the server and going to the cloud, but the company that we're with on the cloud charges a couple $100 more a month than the previous provider did for the help desk and other work. We're the same on most of the other items. And so I'm actually projecting 95,000 in net income versus 45. And we get 20 more in revenue and 10,000 less on those expenses. We would be where we need it to be, and that will help rebuild the cash. Quickly, the next report. I shared with Brian earlier a cash flow report. Again, we're heavily driven by quarterly payments. I'm a little worried about August, but and November, but there is the ability to pay the time payments. We don't have to pay the day the bill comes. It would show
That bottom line is the operating cash?
Yeah.
Okay.
and the April, I started out with the bank account balance.
Yeah.
The other thing we did was we, if you look at the next page, unless you have a question on that. I looked at what our cash balances were at December 31st of the last 10 years. And if you look 3/4 of the way down, bank cash and accounts receivable. I added in the accounts receivable. Well, let's go up to where it says operating cash balances, which is in the first third. You can see in 16 where we reduced it, balance by moving money into a different This doesn't have the $250,000 Bank of Greene County. That's down below. So you can see where we went from 799 to 426 on in 2016.
Mhm.
But you can see we opened up a $259,000 account. And you can see, so I do have UHY working with me to look into the change between 24 and 25. But if you go down and look at, total cash and accounts receivable, we're not that far off between 24 and 25. We're, it's, we're at 691 and 24 and 549. That is the 150,000 we're off.
And just the reserve account in Bank of Green County, that's self-restricted monies.
That's board restricted.
Okay.
If we needed it for cash flow, I'd have to get board approval.
Got it.
As I would to get, transfer money, on a forward going basis. I would never take money out of the loan fund, but on a forward going basis, divert it to operating, that would require board approval. I'm not fully through this analysis, but, I wanted to get the data and I didn't want to push UHY until tomorrow. They had other things to do through midnight tonight. But, so, yeah, I think we're in good shape. I think there's some cautions that we're, looking at to, make sure that, the big one obviously is the SBA, but we're very encouraged by, they're not giving us $1 million, with the idea of not giving us a grant to manage it. And, we do have, the land bank, as a new client. We set up and are managing the county land bank, at, it's $30,000 a year. But there's $100,000 plus ability to draw down administrative funds from the state to run the land bank. And my plan is, we would use, Chris Brown at the end of, this year, when the county housing money drops, we would ask them for additional county money, but we would also supplement it with, having him, do either contract work or an employee of the land bank. Because the county really thinks that's important. And, it is another source of revenue to move that position, there and continue it for him, so. And that's important because you don't want someone thinking that they're on a grant and the grant runs out. They start looking. Don't look, Chris. So just like the rest of you who are in small businesses or running hospitals. It's a mosaic. Or a patchwork quilt sometimes, but I think we're on top of it.
Okay.
Any questions?
Any questions for Mike? Any other business for the committee?
Just want to thank Kat, for all of her work and, this, and getting this done, and then, Lisa had to get it all pumped up into the ABO, and, appreciate all of her work and, everyone else who contributed to, making it happen. Thank you.
And we're all set for the annual meeting.
Generally, we're finalizing the annual report today and tomorrow, so we can get it to the printer on Friday. We'll have the treasurer's report, Friday, and, script, as well as the governance and nominating committee script. Mike Yevely, the regional director of, Empire State Development, is going to be our keynote speaker. Riley, we're up to what, 65?
Yeah, 68, I believe.
And we have 2 weeks to go. Today I'll send out my traditional 500 to 700 personal emails, to my VIP list. Encouraging them to, register whether they have or they haven't. And, we're gonna be at the college. Co-arc is doing the catering. They run the college cafeteria. It's going to be $2,500 less than last year and, $10,000 less than some of our options for this year, so.
What's the date on that again?
It's, the 29th.
Yeah, that might be a good look for everything going on.
Yeah.
They sort of models or something.
Well, the other thing we have is,
And support.
Yeah.
It's a good put.
well, I think it is.
Yeah, and
You're supporting co-arc,
totally.
you're supporting the college. You're giving Dr. Drummer a forum to, do a swan song. And I hope not an industrial military complex speech, but if you're in the college business or hospital business, you might. And that we'll have you read Eisenhower's speech someday, Riley. You don't know what we're talking about. When he left the presidency, he warned the people of the future, but, and trying to think if there's anything else, the audit committee met and the audit was approved and it was, it's posted with the SBA. The single audit, I did work with Jim Briggs at the county and, I have what UHY has asked for. And
File an extension.
they filed an extension on the single audit.
Okay.
But we want to get that done so they don't run out of time on it. And the issue there, was because we get more than $1 million of money from the federal government, because they count the money the SBA gives us, and also the money that we actually have on account with the SBA. And because many of the state grants that we've received are federal funds, they had to do a single audit. And last year was the first time they had to do it. We don't have that many programs, and so the second year or third year, they can't audit the program they audited last year. And so they started wanting to audit all these programs, and 2 of the programs they wanted to audit are not subject to audit under Treasury regulations and guidelines. So, and more importantly, they wanted $7,500 more fee to audit it. So I'm trying to limit the scope of their work by not giving them carte blanche access to programs that, and it's very, very clear that the money we received from the county for Columbia Forward and for the housing program were ARPA money under the COVID money, and it's 3 places it says it's not part of a single audit analysis. But I did start pulling RFPs because there was a request previously that we considered, not a decision made, it'd be this committee and the board's decision to issue an RFP for auditing services. Presumably, if nothing else, to see if we're in the market, if we're being charged the right price. I think that they've done a phenomenal job, but they've done it for a long time, and there's some best practices that suggest that they have rotated audit partners, which is a compromise. But I'll have that for you for the July. Is it July? April, May, June, whatever the next meeting is.
Finance committee meeting, July.
Finance committee meeting. And, basically, I have one that the Ulster County IDA just did. I Googled and found a couple that are out there. And I don't think they need to be too complex, but mostly you give them the general ledger and the previous report, and they can figure it out pretty quickly. Thank you.
All set, motion to adjourn, any second? Second, all in favor?
Happy Passover, happy Easter.